This is Andrew Stotz of Stotz Investment Research, looking at Sweden equity FVMR snapshot. Hello to all my friends in Sweden. And of course, as some of you guys know, Alex, who works with us and is my colleague and partner, Alex, can't spell, whoa, that's hard, X, is from Sweden. So let's look at Sweden versus the world. The first thing we can see is that ROE of Swedish companies is about in line with the rest of the world. Dividend payout ratio is much higher. That's nice. They pay out a lot of dividends. The PE is about in line with the world, and same with price to book. Now, what we can see is that right now the EPS growth estimates by analysts are about 1% versus the world at about 13%. So, and then we see a little bit lower. So a little bit slower growth there, and you're paying a slightly higher multiple. And let's see what we can see here is that the momentum in share price has been pretty strong, up 16% over the last year. And the gearing of the companies is relatively similar to the rest of the world. This one is a little bit, there's still more data coming in, so this one can be slightly off. So I would look at this one compared to this one, and what we can see is that the gearing level is slightly higher than the world, but not by much. Next is price, and what we can see is that the volatility of the price is about 14 versus 9 here. And now let's go and look at a few sectors and see what we got here. The first thing we want to look at is the energy sector, which we can see is got a super high ROE, but wait a minute. Why is that? Well, that's because if we look at the gearing factor right here, it probably means that there's a distressed level of equity, a tiny little bit of equity. So the companies are seeing that their EPS is growing by about 20 to 22% forecasted by analysts, and they're rebuilding their equity base right here. So though that ROE seems very high, the reality is that that's actually an exceptional recovery right now. So now we can see that if we look across the spectrum here, we can see that consumer discretionary companies traded about 26 times. Cheapest is infotech and financials. Financials are usually pretty cheap. Infotech is not. So let's take a look at what we can find from that. And what we can see is that this 26% ROE is leading to about a 10% EPS growth. And that EPS growth, you're going to pay about 17 times or so, about in line with the market. So I would say this looks like a pretty good sector, consumer discretionary, right? And what we can see, though, is that share price is being hit. So right now, it seems to be a bit out of favor. Gearing is very low for that sector, and volatility is very high. One of the more attractive sectors, I would say, in the market. Now, what you can see is the most expensive sector in the market is the infotech. And in fact, there's not much growth. There's a good recovery happening right there. But I would say also these companies are sitting on a lot of cash, and volatility is very high. So it seems to me like they're a bit expensive for what you're getting out of those. This gives a rough idea of what's going on in Sweden as far as valuation, fundamentals, valuation, momentum, and risk. If you want to see your country, just let me know in the comments below. Have a great day.